I'm Darwin Green, CEO and President of HighGold Mining. We're a junior explorer focused on high-grade gold in North America. So today's presentation, given we've got a little longer than your average 10 to 15-minute pitch, I thought I'd provide a little more color on background on a couple of themes. One being our native Alaskan regional corp partner on the project, and the other being digging into some more of the detail on our drill program that's just kicked off in Alaska. We'll be making forward-looking statements. So, off the top here, just to kind of give you an intro to the company, and why invest in High, if you will. We like to think that the value of the company is backstopped by a very high-quality, high-grade resource. We are fully funded to do what we need to do to create value for the company. In our view, cash is the fuel for the exploration industry, and without it, you can't get very far, and we're well cashed up to execute on our plans. And our plans include launching the biggest drill program to date on our Johnson Tract project in Alaska. It's going to be focused on both expanding the existing resource as well as targeting new areas for new discoveries. We think there's very high odds of additional deposits to be found on the district scale property that we control. In addition to Johnson, we've got a very large land package in the Timmins camp, Ontario. That's Canada's top gold producing region. We spent the last year and a half working and coming up with ideas to test, and we plan to be back out there drilling late Q3 into Q4. And we have the cash, we have the people, we have the drills to execute, and we expect this year to be a very exciting and transformative year for the company. Quick overview of the share capital. We've been around. We went public in September 2019. Since then, we've done 4 raises, collectively raising about a little over 35 million Canadian. That's brought in a great roster of shareholders. Each one of those financings we did at successively higher levels. It's allowed us to keep our share structure quite tight, with just 58 million shares outstanding. The last raise we did was back in December, so there's no 4-month hold or anything like that, no overhang on the stock. And we had the good fortune of being able to raise that money and not need to tie a warrant to any of those financings, other than for the very first go public round. And of that, about 70-80% of those have already been exercised. So we're in great shape. As I say, a great roster of institutional shareholders here, as you can see on the right, some high net worth mining individuals, pretty familiar names in the space. And we also have the endorsement of a senior gold producer. This is a senior North American gold producer who did about 6 months of due diligence on our Johnson Tract project, and they participated in our initial go public financing and have continued to participate along the way, staying in the 5 to 10% range. It's great to have that backing of an established producer like that. Market cap currently about 99 million. And started our drill program with between 17 and 18 million in the till. So where we are exactly, we've got 3 projects in the Timmins camp. Most of these are earlier stage. That said, we do have a former high-grade gold producer at the center of one of our projects called the Croesus Mine. We've been quite active out there, but we're not drilling there probably until October. And so most of this presentation will focus on Johnson Tract, where we're most active and is our flagship. We established a maiden resource, 43-101 resource for the project last year. That includes 750,000 ounces gold equivalent at 10.9 grams per ton gold equivalent in the indicated category, and an additional 134,000 ounces gold equivalent at 7.2 grams per ton in the inferred category. It is polymetallic, and what that means is, a little better than 50% of the value of this asset's in the gold, and the remainder is split between copper, zinc, lead, and silver. We have good metallurgy, so we're very comfortable quoting a gold equivalent number. This is just a start for us. We're focused on growing that and making it much larger. Zeroing in on exactly where we are, this is the Cook Inlet region. We are in a very accessible part. We're not remote at all as far as Alaska goes. You can see the major communities here: Anchorage, Kenai, Homer. Relatively close proximity, but we're not really overlooking anyone exactly. Kenai does a lot of support for oil and gas exploration within the Cook Inlet area. You see here that Johnson Tract is actually surrounded by a national park. It's important to understand the history and formation of that park. CIRI, Cook Inlet Region Inc., the native corp that we're leasing the property from, played a real pivotal role in the creation of that park, in that they relinquished a large portion of their land selection to allow the park's creation. So there's an implicit understanding that mining is permitted here, and that's further asserted through a federal act of Congress, which has granted road and port easement rights to allow development of the project across the park. Given I have a little more time, I thought I would talk a little bit more about CIRI and the history of native land claim settlement in Alaska, because it's a pretty interesting story. First off, I'll talk a bit about the lease that we have. CIRI approached us. They're one of 12 land-based regional native corporations within Alaska. Our management team had a tremendous amount of history within Alaska. CIRI was very relationship-driven, and they approached us to see if we could advance the project and ultimately develop it into a mine. We have a long-term mining lease. It has an exploration phase, and ultimately they want to drive this to production and development. They do have a back-end right that would allow them to participate in the project up to 25%. That's a one-time back-end right that would occur at a production decision. So if they were to exercise that right, they would have to contribute their share of building the mine, and they would receive their 25% share of any profits that would come from the project. And we really like that. We think it's a very equitable arrangement. So looking at Alaska, this is the very, very high level history of Alaska. In 1867, Alaska was purchased from Russia for $7.2 million. Not a bad deal when you consider Alaska is 1/5 the size of the entire lower 48. It's a huge, huge landmass, and I think a lot of folks don't realize exactly how big it is and how well endowed it is with minerals. It's a phenomenal place to be exploring and developing mineral projects in our view. It only became a state in 1959, 49th state of the US. And through that Statehood Act, it outlined ways for conversion of federal lands to state-owned lands, but it didn't address land claims by Alaska's indigenous peoples. And it really wasn't until oil was found and the need to access that oil on the North Slope, i.e. the pipeline from the North Slope to the south of Alaska to Valdez, that catalyzed the need to settle the native claims. And that led to the 1971 Alaska Native Claims Settlement Act, or ANCSA. It's a really, really unique model. They created these 12 regional corporations. It's a for-profit model with the land title held by these corporate entities, and the shareholders of those corporate entities being the indigenous people in the surrounding region. After that, there was a little bit of residual settlement that happened in the Cook Inlet area specifically that has some bearing on our claims. So here's just a map of Alaska with the breakdown of those 12 land-based regional native corps. You know, when they selected lands for different reasons, but primarily to generate resource revenue, whether it was oil and gas, mineral, timber, even in real estate in some cases. And Johnson Tract was selected specifically for its mineral potential. CIRI actually did a lot of evaluation of the lands beforehand that led to the selection. And ultimately, it was the follow-up to that that led to the discovery of the deposit. Pretty neat story. We see the fact that Barrick is at Donlin, Teck is at Red Dog, South 32 is at Ambler. Those are all Native Corp owned assets or on Native Corp lands. So certainly the fact that the land claim settlement have been settled, and this model, which I view as the gold standard globally, is a real attractive attribute for Alaska and for attracting major mining companies to the state. Just looking at Red Dog as an example here, it's on Nana land. It's a mine operated by Teck, one of the larger multinational producers in North America. In fact, Red Dog is one of the largest zinc mines in the world, and it's cranked out a lot of revenue for Nana, and a really neat aspect of it, they actually share that revenue amongst the other ANCs or Native Corps. So about 1.4 billion has been shared amongst the other Native Corps. Kind of a neat story. So that's the background for you. Now I'm going to dive into to our project and really what makes our project special. And I thought I'd start off here just showing some of our drill intersections and comparing the grade of our resource against what I consider our peer group. You know, these sort of high grade, generally North American focused, first world jurisdiction assets. And so on a straight drill intersection basis, Johnson has produced some just dandies, you know, up to 107 meters of 19 grams gold equivalent, 12.4 grams gold in that gold equivalent. Real strong intersections. And then if you look just at the deposit itself, you know, if you take the global inventory of these various different deposits, Johnson does compare very well in terms of grade for undeveloped North American assets, gold deposits, that is. Got a couple on here at the very top that aren't North American. Cerro Blanco is actually in Central America and Hod Maden's in Turkey. They're here for comparison. One of our big investors actually was a founder of Bluestone and Cerro Blanco. He looked at the two and said, hey, you got the same grade, but you're 10 times the width. And that really is the differentiator for us. Similar grade to Cerro Blanco, but 10 times the width. And width and grade together are exactly what you want. And that's exactly what Hod Maden has in Turkey. And it's the closest comparable geologically to us. So that's why I included in this peer group. Anyhow, just to hammer that point home a little further, this is a block model for the deposit. Shown here in the shaded color is our indicated portion of the resource. We used a very high or very conservative cutoff at 4 grams per ton gold equivalent. But the key takeaway here is that it occurs all in one big blob, if you will. We've got the grade that you often associate, say, with a 2 or 3 or 4 meter wide deposit, but we have those types of grades over 20 to 30 to 50 meters plus true width. That width and grade together lends itself to very attractive economics, typically with these types of deposits. So then the next question is, how easy is it to mine? Can you access it? Well, it's relatively straightforward. The terrain here works in your favor in that you can put a portal on the side of the hill and ramp in laterally. It's not very far to get to it. In fact, it's lower cost to access it this way than it would be to sink a shaft. And you would have gravity assist bottom up mining, and you'd get the highest grade stuff first. So a lot to like there, lots of flat ground, and very close to the coast. And being close to the coast is huge for a project like this. It reduces your CapEx to build a project in terms of getting your materials to site. And it reduces your operating costs because you're so close to population centers. And ultimately, a project like this would produce concentrates, copper concentrate, a zinc concentrate. Smelters are, around the Pacific. So the closer you are to the coast, the better in terms of reducing your overall costs. So lots to like. All of this is just preamble to say we think we have the makings of the ideal mineral deposit. We've got the grade, we've got the width. That should lend itself to attractive economics. It would be small footprint, underground, with Native Corp interest. It's a lot to like from an ESG standpoint. And what that means is we can focus most, if not all of our efforts right now on the real value creation that comes with drill bit success by establishing scale. If we can get this thing a little bit bigger, we think we can create a lot of value here and create a much longer life mining operation. So we're going to do that by continuing to grow the resource and looking at making new discoveries. We think there's very high odds of there being other deposits out there. So this is the plan. We just launched. We've been drilling for a couple of weeks now. We have 3 rigs on site. We're drilling 20,000 meters. This is by far the biggest program the project has seen. And that drill meter is going to be split between the deposit area down here in the lower left, 1, 2, and 3. So we're going to step out on the deposit. It's open to expansion. We're going to test this new footwall zone we found. A portion of the deposit's been offset by a fault, which we call the offset 2.0 target. And we have some other targets around there as well called the gap BMS. In addition to that, we have all these regional prospects. And I will talk to you about those more in just a minute. But it's a pretty compelling story that's starting to emerge here of a much bigger system. We have this really exciting deposit that's got a lot of opportunity to grow. And now it's clear it's tied to a much bigger mineral system that we're only just beginning to understand. On the left is a schematic sort of geological model for how the deposit formed. And, this is not just for academic purposes or to have a pretty picture. It actually helps guide our exploration and tells us where we are in the system or when we're close, where we need to go to get closer to the heart of the system. And when this formed, this is an unusual deposit in that it shows characteristics of a VMS and characteristics of an epithermal. VMS in that it has this unusual concentration of rich and base metals along with very high grade gold. So it formed in a shallow submarine environment. The key features you need to see here are the fact that there's one specific geologic unit that seems to have been the most favorable spot for the higher grade gold to deposit. And so a lot of our deposit actually conforms to that layer of stratigraphy. It's called a dacite tuff, and I'll reference that unit again later. We discovered late in 2019 and then through 2020 a new type of mineralization that occurs stratigraphically below the deposit. We call it the Footwall Zone or Footwall Copper Zone. And then also last year, we discovered for the first time VMS style mineralization. It was about 8 meters of just under 10% zinc equivalent, kind of significant. We only have one hole into it, had less gold, but pretty interesting all the same. And then at a very nearby prospect, we have classic low sulfidation type epithermal mineralization. I'll walk you through that at our Difficult Creek prospect. So anyhow, that's how the deposit formed. But when you make mountains, like where we're working, you tend to fold and fault the stratigraphy. So everything you see on the left side got turned on its end. So everything's tilted right up on end, and then it's been sliced up a little bit by faults. And so just to kind of sketch on the elements here, we have the footwall copper mineralization that was feeding up into the overlying dacite tuff unit, this medium gray guy. And then this is where all the high-grade gold, the highest grade gold was dumping out, and surrounded by this really unique alteration called anhydrite alteration, the purple here. And then you see this thick black line that tracks along here, and you kind of ask, well, what happens out here? Well, this is a fault. It's a post-mineral fault, and what that means is it came in after mineralization, after the deposit formed, and it's displaced whatever continuation of the deposit came down here to somewhere else. Last year, we were targeting that. We had an idea of where it went. We actually had a pretty high confidence on where it went. Turned out we were wrong, but we learned a lot from that. We recalibrated our geological model, and we'll be testing a new area now for that portion of the deposit. So there should be some portion of the deposit displaced floating out here somewhere in or out of the page. And the prize is pretty good considering we had 75 meters of 10 grams right next to that fault. We had another hole that was 72 meters of almost 18 grams. Again, very close to that fault, and you get on this side and it's fresh rock. So somewhere out there is going to be some good grade over good widths. We don't know how much we're going to keep finding. Being an optimistic geologist, I think a lot. In the meantime, while we're testing that, we also learned that the main part of the deposit actually had a lot of scope to grow. It wasn't just reliant on finding this offset target. So my next slide is going to be a long section cut, into and out of the page showing where we're exploring. So 200 meters for scale. You can see down here in the lower right, the dashed red outline is the limits of the silicification that we've been able to identify. So that's this kind of pinky red color you see here. Not all of that is ore grade, but most of it is. And when you get into that, you're into the guts of the system. So this is where the resource sits, our sub 900,000 ounces gold equivalent. Last year, we proceeded to drill out this way. We took fairly modest step outs. We kept stepping out. And then towards the latter part of the program, we took a really bold step out. We hit the mineralization way out here. And that was significant. And it was really a breakthrough for us because it told us the whole system kept trending in this direction. Now, the grades and the widths weren't quite as strong as what we had up here, but they were the type of grades and widths that have been mined historically elsewhere in the world plenty. So there were good quality intersections, just they didn't meet expectations of what you had up here. So our mission, this drill program, is going to be to keep expanding that, but we will also be backfilling this area so that we can convert all of this into resource. We have stated that we will do an updated mineral resource at the end of this season's drilling. So I imagine that would be sometime early 2022, we get that to the market. We already have grown this deposit some with our drilling last year. We hope to be continuing on that theme. In addition to that, we have several other target areas in this plain. Out this way is where we were drilling what we thought was the offset. It wasn't. It's actually a continuation of the main system. Our offset is actually deeper and out of the page behind us. So we'll be testing down here, taking big step outs to see if we can pick up the displaced portion of this deposit. In the meantime, we think there's good odds of finding more throughout this larger panel. And just by example, we found a meter-wide boulder on surface running 26 grams per ton gold, 4% copper, 4% zinc. It certainly didn't roll uphill from the deposit. There's a fair bit of overburden here, so we don't know exactly where it came from, but we suspect it came from somewhere in this area, and it's a very thinly drilled area. We know we have mineralization here, so we will be testing this to see if we can find more of this type of mineralization, maybe another sub-parallel zone plunging down like so. So lots to be testing in and around the deposit area. In addition to all of that sort of main deposit style mineralization, we're going to put some holes dedicated exclusively to better delineating the footwall copper zone. So, these are some of the intersections we've hit at the copper zone. I think if you have these same intersections in a copper focused junior explorer, you would get a lot of people pretty excited about it. Most people see us as a gold story. So I think they kind of didn't really understand how significant these were, but these are classic high-grade underground mining copper type widths, 20 meters at 2.4 copper, including 7 meters of almost 5% copper with good zinc and silver credits, 39 meters of 1.6% copper with a sub-interval of 14 meters at 2.7 copper, again, nice silver credits, and up to almost 60 meters of 1% copper that includes, again, very high-grade and quite wide intervals such as 12 meters at 2.8 copper and 4.5 at 4.8. So we'll be drilling this hard as well. It's kind of like a sub-zone that's a little bit separate but parallel to the main deposit. You will be producing a copper Kona anyways, so this is good value add for the project as a whole. So next here, I'm just going to scale out. I'm going to look at the bigger picture here. One of our mandates last year was to better understand the regional opportunity the property offers. When we acquired this property, part of our due diligence, when we flew and checked the property out before we signed the lease, the first thing that really jumped out at me was the number of alteration zones and gaussons that you could see over the length of the property. And so when this was first discovered in the early 80s, it was discovered by regional reconnaissance work, and they identified a bunch of prospects, but then they made the discovery of the main deposit down here in the lower left. And they essentially did no more work on these other prospects. So one of our mandates this past season, last year, was to better understand what we have. And we did soil sampling, we did rock sampling, we did prospecting and mapping. And what's shown here are soils and rock samples. Soils as circles and rock samples as triangles, with the color coded by gold, with the warmer colors being the gold. And if you knew nothing about this property and all you saw was this surface geochem map, the main deposit might not be the first place you drill. Our DC and Milkbone prospects have a very sizable soil and rock geochemical anomaly, very impressive. The only prospect that's seen any drilling other than the main deposit is the very northern edge of the DC prospect. We found a brand new vein field that's over 1 kilometer in length and several hundred meters wide. We're really excited about this, and I'll zoom in on that next. A little bit further north, we have the EC prospect, stands for Easy Creek. We know less about this. Again, very early stage, we ran a reconnaissance soil line. It's about 1.5 kilometers long here. It's running anywhere from 20 ppb to better than 1 gram gold in those soils. You'll go across the valley. We have another big anomaly that's clearly, this is all one big system. So we need to do more work there before we're ready to drill. We hope to be ready to drill there by the end of the season. But in the meantime, we'll be hitting this area hard. And what we see emerging here, so I'll walk you through DC and then some geophysics for Kona. But this is stratigraphically higher up section up here. And as we go to the northwest, you're going deeper into the system. It seems like this might be the driver for everything. This may be one big system. That's our theory that we're running with now. And we have a big geophysical anomaly right in the base of the creek valley here that's quite interesting, and I'll walk you through those targets next. So first, looking at DC, this was a brand new vein field. You see anywhere from 100 grams to 1,800 grams per ton silver. Really, really nice silver values. Lots of different veins at different orientations. We've been able to track it out over about 1 kilometer. We didn't get any of these assays back until we were until we shut our program down last season. So we got these at the end of the year and into the early 2021. It was pretty exciting to see the picture emerge. There's a pretty interesting story here, because unlike the main deposit where everything's tilted on end, here it's fairly flatline. And what we see is strong metal zonation. So very high silver values up on these veins on the ridges where there's outcrop. As soon as you get off the ridges, you lose the outcrop. But then you get down deep, down, lower down, you pick up the gold. So vertically, about 200 or 300 meters lower in elevation, you get in the gold pickup. So quite significant gold too, 22 grams here over 1.5 meter chip sample, 50 gram grab sample. This was where there was a couple of historic holes. They had up to 3.5 grams over 35 meters. Pretty interesting stuff. Now, if you go up and over this ridge and hill and back down the other side of the mountain here, we ran our reconnaissance soil line here too, and we got 4 grams gold in soils, up to 184 grams in grab samples. So pretty neat system. Now, what's extra cool about this is the fact that where we're seeing this gold and this alteration is where we're transitioning into the dacite tuff, the same host unit as our main deposit 4 kilometers to the southeast at the JT deposit. So our theory is that same unit tracks through underneath this whole area, and these high-grade silver veins, which look like they're very high in the system, we're going to drill those for their silver potential. We really like them, and we're going to chase them deeper until they intersect that dacite tuff below to see if they yield gold, higher grade gold deep down. So it's a pretty raw prospect, but it's a very high quality prospect. We've done lots of work to tee it up, and we're ready to hit this hard. Now, going a little bit further, further west here, this is some IP data that we have for some geophysics. Early reconnaissance lines, we're going to do some infill lines. The key takeaway here is there's a boomer chargeability anomaly sitting right in the floor of the valley. This is probably the biggest alteration cell we see on the property. So we think this may be the driver to everything else that we're seeing. So we'll be drilling this as well. Just to keep things going. So that's Johnson. lots of shots on net, so to speak. I'd be remiss not to talk a little bit about Ontario. We've got a great portfolio of properties. We are one of the largest landholders with, of good high potential gold ground within the Timmins camp proper. There's over 70 million ounces that's come out of the ground right here. We're kind of on trend this way. We're on one of the other breaks, the Pipestone break, and a major flexure. This is an area that seemed very limited past exploration, in part because of the overburden, in part because there's a lake that covers it. If you held this property up and compared it to Wesdome's Kona project, they'd be like a mirror image. Very similar shallow lake environment. Therein lies the opportunity and why it hasn't been tested, but it's not prohibitive, if you will. Meanwhile, further east, this part of the camp is really heated up. Our neighbors, Moneta Porcupine, they took a 2 million ounce resource and grew it to 5.5 million ounces. Then they acquired a deposit right next door. So they control about 8.5 million ounces in one of Canada's top mining jurisdictions. There's another asset called Fengib that's in a new issuer that, was a bit of a hot potato before as companies kept getting taken over, senior producers. So lots and lots of gold here. There's going to be lots of eyes on this part of the belt. What we've done is we've consolidated around our core Munro Creases claim. We've grown our property about tenfold after doing 10 different little deals. A lot of these claims were tied up from the early 1900s. And it's because it was a patchwork of different owners. It's never really seen significant exploration, certainly not since the 1930s. So we're really excited about hitting this and Golden Mile, applying new methods and doing some big picture thinking here to make some new discoveries on this ground. And that'll keep us busy through the winter months. So that's it. That's the projects. I'll try and wrap things up here without going too long, but be remiss again not to talk about the people. We bring a lot of expertise to the jurisdictions where we operate, both Alaska and Ontario. We've got a very deep bench technically. That's driven by Ian Cunningham Dunlop, our VP Exploration, and the project managers we have on site. We've got a very engaged and professional board. Mike Cinnamon, CFO for B2 Gold. Michael Gray, he's a well-respected mining analyst. Lance Miller, he's VP Natural Resources for one of the native corps in Alaska. He also happens to be a PhD geologist. And Anne LaBelle rounds things out with a tremendous amount of legal and sustainability experience. So great group. And one aspect most people don't talk about at these presentations, but I think is a huge difference maker for our business, is the actual team and the contractors you're able to get on the ground to do the work. We've got a fantastic team and a fantastic drill contractors and support up on site that really makes things tick, and I think significantly increase our odds for success. And throughout it all, from the board to our executive management down to our geologist on site, we all share a common commitment to protecting and benefiting the regions where we operate. We take our stewardship of the land very seriously. We view it as a privilege to have the opportunity to work in these areas. We're committed to leaving a positive legacy and hopefully create some wealth and long-term economy for the region with the work that we do. So that's us, big catalysts. We've got a big drill program going on at Johnson Tract right now. We're going to be able to drill there right through to late October. As I say, it's a mix of deposit expansion, drilling for new discoveries. We're going to do some met work. We've got a new resource update planned for early 2022. As we wind down in Alaska, we'll be picking up in Ontario. So we should have drills turning steady right through to Christmas. And I imagine pick up again in late January. And we're fully funded to do it all. So thanks so much.